Good evening, everyone. It's Monday, March 22nd. I'm Charles Brown, Portfolio Manager with CB3 Financial here in Nashville. We are glad you're with us tonight after the trading day. From COVID to U.S. politics to world economics to clarity. This is CB3 Live, and we are in Season 2 now for the Monday Market Mashup. And I really just want to go over why we do these programs for you. First of all, the Monday program really leads into the Thursday night program. So I'm going to give you just a taste now of what I've got in store for you on Thursday night. And of course, Tuesday and Wednesday are still in front of us. So who knows what could happen in the markets there. But I'm just an investor like you guys. Okay, yes, I'm a portfolio manager. You know that. I'm also an educator. You know that. But the most important affinity that I have with you is that I am an investor just like you. And it's really my goal to be able to give you guys peace of mind about your financial decisions. And when you hear all the craziness in the news, sort through that and just give you the essence of what's really happening and what's really important. So the two things I ask myself before every production that I do, every episode here of the Monday Market Mashup and Thursday's CB3 Live, is what can I do to help encourage you? And the second thing I ask is what can I say tonight that might give you some encouragement about your financial future? And that's what the goal is of our two programs. And we start the week with the Monday Market Mashup. This, again, as I said earlier, leads into the Thursday program. For those of you that are new, maybe you don't know that, but that's what we do here. So tonight's theme is the COVID aftermath with a question mark. I think it is. I think we are definitely on the downturn, and we will not be heading back up. And earnings yearnings. We have finished a really strong earnings season. It's not quite over. I think there's 2 companies left in the S&P 500, but it's still really strong. If you're new to the broadcast, we'd ask that you subscribe to us on YouTube and also click the little bell so that you get updates when we go live. Also follow me on Twitter, Facebook, and LinkedIn. So this season, we're breaking everything down into 3 categories: COVID, U.S. policy, and the world economy. The reason that we're doing this is to give some structure to the materials that I present to you. So what I'm doing on Mondays is I'm going over each of these categories and just hitting the highlights so that you know what you can expect on Thursday. And again, with Tuesday and Wednesday in front of us, and actually the first part of Thursday, anything could change here, but this is what I expect to have on tap. So with COVID, we're really dealing with the aftermath now, and that's why it's called the aftermath in the thumbnail there. Here's a story about a store shutting down, basically just could not stay open. 54 employees out of work. I'll tell you more about that on Thursday, but it's what really concerns me about the country and the way, basically the government has just made it almost impossible for small retailers to stay in business. In addition to that, we've got a lot of kids that are out of school. I'm going to show you some maps and just some really disturbing things. The United States is one of the, and you see it's in dark here, one of the longest withheld students from their classes. Didn't really say that too well, but the point being that, 50 plus weeks in many parts of the United States, and the economic and personal and even psychological damage from that concerns me. And I'm going to expand on that on Thursday night when I see you guys then. So retail stores closing, children not returning to classrooms, government lockdowns. This is another story, forcing a PhD candidate to give up closing ceremonies. This is somebody I actually at least know through a family member. And these are the kind of stories that concern me, guys. COVID, again, is on the way out. I don't think I need to cover the medical benefits or issues that much more at all. But now we have to look at the aftermath. It's kind of like the tornado went through, the hurricane went through. We've got to assess the damage, and now we've got to figure out what we got to do to get back on track. But even as important as that is, if this were to happen again in our lifetimes, or even if it's in a future generation, how do we approach it differently so that government doesn't just literally take over the economy? And I don't say this in a political context. I say this because I care about your portfolios. I care about mine too, but obviously I'm here because I care about yours. And our finances have been severely impacted by what happened in the way the government handled this COVID case. So the second segment in this series, or at least in this season, is U.S. policy. And although I'm looking at several issues for Thursday night, what I really want to point out to you is that this is not a political section. Here's the reality. U.S. policy starts with politics, okay? Politics is what starts the process. That's people bickering, discussing, doing whatever, but those politics actually lead and turn into policy. Now, at that point, it's just a law on a piece of paper. But then it affects us at a personal level. So politics goes into policy, which leads to personal impact. And it's that personal impact that mostly is what's concerning to me, because I don't think people realize, I just don't think people realize that the decisions that are being made at the federal level are trickling down to us at the state and local level. And many of these decisions, I don't believe, are in the best interest of us as Americans. And even if you don't want to believe that, I definitely do not think they are in our best interest as investors. And that's what I'm covering in this section on Thursday night. Okay, so the third issue there is whether there's a portfolio impact. And yes, I think that's absolutely possible too. We'll cover that in greater detail again later in the week. So the third section, the world economy, we actually break this down into multiple subsegments. And I'll cover each of those just briefly tonight again and go in more detail on Thursday. The market review, we look at how the Russeell is just demolishing the other indices. And this is, of course, is a significant change from last year. If you guys were following me on the Monday market matchup, it seemed the market was just on fire most of the year, of course, from March 23rd. Now look at the calendar. So that's a year ago tomorrow was the low of this bear market. We're now in a bull market, of course. The bear market only lasted about 5 weeks. And that's because we're in a secular bull market. We had a cyclical bear market, and we returned to the secular bull market. All right. And that's one reason the Russeell is doing so well. That small cap, the Dow, S&P, and NASDAQ bringing up the rear there. But Thursday night, I'll go into a little more detail on our actual programs, how we're doing year to date. You can see the description there on our programs. And then I've got a summary page here, and I've bounced this off several people, trying to show you as clearly as I can how we perform versus the other indices. So if you remember, I showed you the actual indexes. That's the Russeell, the Dow, the S&P, and the NASDAQ. Okay, those are the 4 major indices in the U.S. markets. And then I showed you the performance of our programs. And now I'm showing you the performance of our programs ranked from top to bottom with the indices. Now, obviously, I'm not going to spend much more time on this tonight, but I will take questions on this live. We'll be on this page for, quite a while on Thursday night. So please come back for that. So the decisions that I make come from looking at economic indicators. And that's why I have a subsegment on this, because you don't just go out and buy a stock willy-nilly. Obviously, you're looking at a lot of economic indicators, just a couple of which I'm going to cover tonight. But one of them that I really like is this recovery versus the Great Recession. So if you look at the blue line, you can see how that big V correction there, 12 months into this, we're looking really good. Look back at the 2008 Great Recession. I mean, it took a long time to have a bounce back. In fact, 48 months. See the months from peak there at the bottom? It took 48 months, and it wasn't even back really as strong as we are here with this, great lockdown and recovery. I guess that's what they're calling it now in the history books. And then the GDP projection here of 7.0. This is astounding. Now, those of my conservative friends may very much have noticed and be discouraged that during the Trump administration years, the GDP never quite reached as high as President Trump was hopeful and actually predicted it would. But if you look back at this chart, you will see that going forward, 7.0 for 2021, and then farther over on the chart, you'll see how that breaks down, and then it averages out to 7.0. But that's actually a very powerful look for GDP. Looking at the Fed, basically they met last week. The Fed decided to hold the line. So a dovish stance means that dovish is gentle, and hawkish means stern. So dovish means the Fed wants to keep interest rates low, and hawkish means that they've decided they need to raise rates because of inflation concerns. Well, there are some inflation, eyebrows being raised, but not anything serious, or they would be making different policy statements. And so thus the policy statement, basically didn't change at all. In U.S. housing, this is a really important section that I look at. Just real simple chart. Look at the median price of homes. All right. And it's basically back to where it was in 2005. I think actually it took that out. So this is at a 20 plus year high, existing home prices in America. Again, guys, we're seeing a statistic like this happening in a pandemic, just getting out of a recession, just getting out of a bear market officially in May of last year. So not even a year into this. This is an astounding statistic, and I'm hopeful that it brings you encouragement. That's the purpose of these videos. When you're seeing that home price rise like that, that's just a really great sign. The other home indicator here that I'm seeing is that, and this is going to be a little feature on Thursday night, is people buying homes with multi-family generations living under the same roof. This is an interesting story, which again, I'll be following up on Thursday night. So the Crypto Corner, about a month ago, I put out a survey where you guys indicated that you just want to know more about crypto. And so I've said I'm going to handle this in every single broadcast that I do because the world is changing. The crypto world is changing. But the important elements of this, rather than the day-to-day price changes, I'm not really going to show you prices like I do in the markets because it's just not that relevant to you. I really want to teach you. I want to have you understand what the purpose of the crypto market is. And it's pretty simple. Crypto is a currency. At least that's what the intention is. Many people are calling it a separate asset class, but their intention, the designers of these various coins, is to become a currency to give individual control and to facilitate capitalism. Now, that's a lot of words. Crypto leads to currency, which promotes control, which facilitates capitalism. So the advantage to a cryptocurrency versus a fiat currency that's sponsored or, distributed by a government is obviously no one controls the crypto market. The U.S. Treasury controls the U.S. dollar, okay? And the Bank of England controls where the British pound trades, etc. That centralization of a currency leads to government control. And there are many people that believe, and I'm one of them, that is not always in our best interest. So that's why I have an interest in the way that crypto is developing, and that's why it's become a segment in our program. So then, basically, as I said, cryptocurrencies were created to supplant. That means replace fiat currencies. That's going to be our theme pretty much as long as we're doing this segment. So we have two special segments now. So that's our regular segments that you guys have seen. We're going to do about a 10-week segment here on American energy. And I've introduced this in the last 2 weeks, the 5 sources of energy, but 80% of energy usage is actually fossil fuel, and that's going to be the focus Thursday night. I hope I'm not upsetting anyone by focusing on my first week with fossil fuel, but the reality is 4/5 of every kilowatt, and of course driving and cars. I mean, yes, Tesla's inroads. I'm a huge Tesla fan, but the reality is that fossil fuels are still what's moving this country. They're transitioning. We are transitioning to other currencies. Sorry, guys. I got that on my brain tonight. To other energy sources. Okay? But it's so important that you realize that fossil fuel is what has built us up since the Industrial Revolution. And it's not going away easily. We hope to make a smooth transition to more eco-friendly energy. But that's going to take time. That's definitely going to take time. So, and then the final segment that will become a weekly segment for several months is investing, in post-COVID America. Now, this is, again, something that you might not expect. It's not so much talking about, what it's like to be an investor studying GDP and PE ratios, etc. This is about what is changing in America and this move among certain constituencies to migrate to a socialist command economy as opposed to a capitalist economy, which is a market economy. So with a capitalism, you can see it on the screen, the market sets the prices and the distribution of goods and determines which goods are important to be distributed. With socialism and communism, a command economy, basically there's a tyrant or a small group that's creating a central plan that enforces economic decisions that may not be what the majority of the people want. And it concerns me, but that is what is being talked about in the U.S. right now, more so than at any time in my life. And then we have a summary of all of the topics that I covered. I go over this for about a minute. It gives you guys time to ask questions. We have a real lively, I'll say, question and answer section at the end of the video. It's really a lot of fun. If you haven't been on the Thursday night, or if you've just kind of snuck on and not actually signed in, you have to use your Gmail account and sign in. But I hope you'll sign in and tell your friends, tell your family that this is a place you can ask questions of a portfolio manager if it's managing real money. He's been doing this for more than 30 years, and I'm happy to have you guys put me on the spot about anything that I talk about, okay? That's why I do what I do. So that's the program for tonight. Thursday night is going to be the COVID aftermath with an exclamation point instead of a question mark. And then we're going to talk about being ready for 2Q21 because that's on April 1st. I always think it's interesting that second quarter begins on April Fool's Day. But at that point, we begin looking for the earnings reports for the first quarter, and it makes it interesting. Just asking you again if you would go ahead and subscribe. Be sure and click the bell so that you get updates when I go live. Follow me on Twitter. I tweet every single day, and building a pretty good audience on Facebook and LinkedIn. So that was Monday night, March 22nd. I'm Charles Brown, Portfolio Manager with CB3 Financial. We would love you to be part of our community that watches on Mondays and Thursdays. We think we offer a lot of educational value for you. And for those of you that are clients of ours, we're glad to have you join us. For those of you that just want to hang out and learn some stuff, that's great too. From COVID to U.S. politics to the world economic scene, to clarity. This is CB3 Live and the Monday Market Mashup. We'll see you on Thursday night.